Reminiscences of a Stock Operator is a classic book about the life and experience of a legendary trader named Jesse Livermore, shown in the story as Larry Livingston. It is more than just a story of the stock market, it is a journey of learning about human emotions, discipline, and the art of speculation. This book shows how a young boy fascinated by changing prices becomes one of the greatest traders through trials, mistakes, victories, and failures. It teaches how markets move because of human behavior and how price patterns repeat through time. Readers discover how greed, fear, hope, and panic influence decisions, and how smart traders learn to control these feelings instead of being controlled by them. The book is filled with lessons that remain valuable even today, such as why patience matters, why risk management is survival, and why following the trend is wiser than predicting the future. It is a story every investor and trader should experience because it blends wisdom with real-life truths from decades of trading. This introduction opens the door to a journey filled with insights that can guide anyone who wants to understand the market deeply. Now let us step into the world of speculation through the eyes of Larry Livingston. Chapter 1. Early Years, Bucket Shops, and First Trading Lessons. Larry Livingston was a curious young boy who spent his early life watching stock price boards in a small brokerage room. He was not from a wealthy family and had no special education in finance, but he had a sharp mind and a strong desire to understand how price moves. Every day, he looked at numbers changing on the board, and something inside him wanted to know why some prices go up while others fall. He started writing down price moves and noticed patterns. He could guess which stock might rise next by remembering how it behaved before. This gift was not luck, it was observation. Soon, he found a place called a bucket shop. A bucket shop was like a betting house where people did not buy real shares, they only placed bets that price will rise or fall. For young Larry, this place became a school. He placed his first small trades with whatever money he saved. At first, he traded for fun, but when his predictions came true and he earned little profit, he felt unstoppable. He believed the tape that is the stream of price changes told more truth than any advice from people. When he focused only on price movements, he won again and again. Other traders in bucket shops depended on news and rumors, but Larry trusted only what he saw on the tape. He learned that news comes late, but price moves early. In his mind, he formed a rule that price is the real voice of the market. People laughed at him because he was just a young boy, but soon they were surprised when he made quick profits. But success created attention, and bucket shops did not like regular winners. If someone kept winning too often, these shops banned them because the shop lost money. Larry was banned from one shop, then another, and soon from many. He was not angry. Instead, he realized something important. He learned that trading skill can work anywhere as long as price exists. This gave him confidence that he could survive even in the real market of Wall Street one day. But early success also tricked his mind. He thought trading was easy, and he would always win. He did not yet understand risk discipline or big market pressure. He only knew how to read quick movement, not long trends. His wins made him fearless, but also careless. Slowly he understood that the market rewards skill, but punishes ego. Still, these bucket shop days were precious. They trained his eyes to read the tape like language. He discovered that patterns repeat because human emotions repeat. Fear, greed, hope, and panic appear in every generation. A trader who understands behavior understands price. He spent many hours every day just watching without trading. He waited for right moment and struck when the direction looked clear. He learned patience in small amounts, though he still lacked complete discipline. When he won, he felt proud. When he lost, he tried again. He realized that losses are part of learning. One key lesson entered deep in his mind. The market is never wrong. Only traders are wrong in their timing or belief. A trader must accept what price shows instead of forcing his opinion. He saw many bettors lose because they argued with price instead of following it. This was his first taste of trading truth. By the end of his early period, Larry became famous among bucket shop owners, not as a gambler, but as a danger to their business. They believed he had some magic, But the magic was simply observation and discipline in entries. He could feel when a stock wanted to rise or fall through the tape movement. This gift became the foundation of his future career. Even though he was pushed out of bucket shops, he did not lose hope. He started dreaming bigger. He wanted to go where real money moved, where real stocks traded in real exchanges. The calling of Wall Street grew louder in his heart. He believed that if he could beat bucket shops, he could surely take on the real market. This belief pushed him to take the next big step. And so with young blood confidence and hunger for challenge, Larry decided that his journey must continue beyond bucket shops. He packed his experience, his lessons, and his instinct, and moved towards the larger world of trading. He did not know that the real market was far tougher and would teach him painful lessons ahead. But every great story begins with fire in the heart. Larry Livingston was ready for the next chapter of his life. Chapter 2. Transition to real trading on Wall Street. Leaving bucket shops was like stepping out of a small pond into the deep ocean. Larry arrived in New York with the same confidence that made him a winner earlier. He believed that reading the tape was enough to succeed anywhere. But the real stock exchange was different, bigger, and much more complicated. Price did not move as fast as bucket shop boards. Trades needed real money, real shares, and every mistake cost heavy. Larry soon realized that Wall Street was not a playground. It was a battlefield where patience and discipline mattered more than quick thinking. In bucket shops, he could make money fast because movements were small and clear. Here on Wall Street, prices moved slower, and trends took time to form. He entered trades with confidence, but exited with regret when losses grew. He tried to trade the same way he used to trade before, but it failed. He lost his capital and felt shocked. His skill worked before, yet suddenly he was losing. He felt the weight of real markets pressing against him. Larry borrowed money from friends, hoping to recover losses with one smart move. But hurry never saves a trader. He traded without waiting for proper signals because he wanted to win everything back. This led to more losses and more disappointment. He realized that trading under pressure is dangerous. Emotion makes decisions weak. For the first time, he understood the difference between knowing price patterns and living through real market emotions. Every tick felt heavier because real money was at risk. His heart would race when price moved against him. He learned that reading the tape is one skill, but controlling one's mind is another. After heavy losses, he returned home defeated. The dream of Wall Street looked like a mountain too big to climb. His pride was broken, but not his spirit. He thought deeply about his mistakes. He remembered lessons from bucket shops that price action always tells the truth. He decided he must wait for clear direction instead of forcing trades. He spent time watching the market without trading, just like in his early days. He observed long trends, slow rises, sharp falls, and silent periods. He noticed patterns, but now he watched them with more maturity. He realized that big money comes not from frequent trades, but from big moves that unfold over time. Soon Larry returned to trading, but with a new attitude. He made fewer trades, but made better choices. He waited for market confirmation before entering. Slowly, he recovered some money. He felt the power of patience. Then came a moment when he saw a stock building strength day after day. The trend looked solid. Instead of jumping early, he waited for the right breakout. When it came, he entered and held through swings. He made profit and felt hope again. It was not easy money, but it was earned with discipline. Still, his journey was not smooth. He made progress and again fell into old habits. Sometimes he got excited and traded too large. Losses returned like a warning. But each failure carved a lesson deeper inside his mind. He learned that survival is more important than winning fast. Larry saw rich traders losing fortunes because of pride and impatience. He noticed that successful traders were calm and waited like hunters. They did not chase every move, they waited for the right opportunity. He realized that real traders do not fight the market, they follow it. The market leads, and traders must listen. During this time, Larry built new respect for Wall Street. He no longer believed it was easy. He saw that experience, knowledge, and emotional strength are as important as strategy. He accepted that losses are tuition fees paid to the market for wisdom. With every failure, he became sharper. With every profit, he became more patient. He understood that trading is not about being right every time. It is about being prepared when the opportunity arrives. This chapter of his life shaped his mind like iron in fire. He was not the same boy who won easily in bucket shops. He was transforming into a trader who could survive storms and wait for the sun. The foundation was built, and now he was ready to face larger trends, bigger risks, and bigger rewards in the future. His journey toward mastery had only begun, and tougher lessons were waiting ahead. Chapter 3: Learning from Mistakes and Understanding Market Movements. Larry Livingston entered a new phase in his trading life where mistakes became his greatest teachers. He realized that every loss carried a message, and ignoring it only meant paying for the same lesson again. Instead of blaming the market, he began to blame his decisions and tried to correct them. This shift in thinking marked the beginning of real growth. In his earlier days, Larry chased every move. He believed that every rise or fall meant a chance to make money. But soon, he discovered that most trades fail not because of direction, but because of timing. Entering too early or too late was enough to turn a good idea into a loss. He understood that success in markets comes from waiting for the right moment. One correct trade is better than many fast trades. Larry studied price behavior carefully. He noticed that when a stock begins to rise with strength, it continues for a while. When it starts falling with weakness, it keeps dropping. He decided to stop guessing tops and bottoms. He followed the trend instead of fighting it. This small change saved him from big pain. Another mistake he fought against was holding on to losing trades. In the past, he hoped losses would reverse. Hope became a slow poison. The market does not reward hope, it rewards discipline. He learned to cut losses quickly and protect his capital. Taking a small loss today meant staying alive to trade tomorrow. Larry also learned the art of sitting tight on winning trades. He realized that most traders exit too soon when profit appears. Small gains feel good, but they prevent big wins. He forced himself to stay in profitable trades longer. He told himself that big money comes from big moves, not small jumps. He also observed crowd psychology again. When the majority becomes overly confident, he became careful. When fear spreads across the market, he watched for opportunity. Price movement is a mirror of human emotion. Patterns form because people repeat the same emotional reactions over time. Larry kept improving by thinking after every trade. He asked himself what went right, or what went wrong. He was honest with himself even when the truth was uncomfortable. Slowly, he began to feel a deeper connection with market rhythm. The tape no longer looked random to him. It felt like a language that he was learning to read fluently. Although he made progress, he still stumbled sometimes. Old habits tried to pull him back into overtrading. But this time, he fought harder to stay disciplined. He began to value patience more than excitement. Waiting became a strength instead of weakness. At this point, Larry was no longer just a young gambler. He was turning into a thoughtful trader who respected the market. He understood that the market has its own mind. A trader must listen rather than command. He must follow the trend with humility. These lessons formed the foundation of his success. Larry stepped out of this stage wiser than before. He now believed that knowledge grows through experience, not through theory alone. He was ready to face the next stage of his journey, where emotional control and discipline would be tested even harder. Chapter 4: Struggles with Discipline and Avoiding Overtrading. Even after gaining experience, Larry still battled with his biggest enemy, which was not the market, but his own impulses. He loved action and believed that more trading would bring more profit, but the market punishes impatience. He often entered trades without waiting for a clear setup. Small losses kept adding one after another. He learned slowly that overtrading is a silent killer of capital. There were days when the market gave no clean direction. Instead of waiting, Larry forced trades hoping for quick gains. Sometimes he won, but mostly he lost. These losses hurt more because they were unnecessary. He realized that doing nothing is often the smartest move. Staying flat is also a position. Larry remembered his bucket shop lessons and tried to regain patience. He would sit and watch the tape for hours without taking action. It felt difficult because his heart wanted to jump in. But when he waited for the right moment, profit came easier. He saw that profitable trades were the result of preparation, not impulse. He also learned that discipline is not a one-time thing. It is a habit built every day. Each time he closed a losing trade early, he strengthened his discipline. Each time he waited for confirmation, he improved control. Slowly, patience started to become natural for him. Another issue he faced was letting ego speak louder than logic. After a few wins, he felt powerful and increased his position size. Confidence turned into pride. The market humbled him with sudden losses. He realized that success can blind traders if they are not careful. Humility is protection. Larry studied great traders and noticed something common. They traded less than average traders. They waited like hunters for the perfect moment. They did not waste bullets on weak signals. He tried to follow the same path. Even then, Larry had days where emotions controlled him. One good trade made him excited enough to take 3 more unnecessary trades. One bad trade made him impatient to recover money quickly. Recovery mindset caused more mistakes. He learned that revenge trading is dangerous, so he set simple rules for himself. Enter only when the trend is clear. Exit quickly if the market proves him wrong. Hold tight when trade moves in his favor. Trade less, but trade better. These principles became his tools against overtrading. There came a time when Larry stayed out of the market for days. He watched calmly and waited. When a strong setup finally appeared, he acted with confidence and gained well. That moment proved that patience is profitable. He began to treat trading like farming. There is a time to sow, a time to wait, and a time to harvest. You cannot rush the season. In trading, the season is the trend. A trader must wait for the right weather before planting money. Larry understood that discipline was not about knowing what to do. It was about actually doing it. The hardest part is not in planning, but in controlling emotions when real money is at stake. Through continuous practice, he became more stable and less reactive. By the end of this stage, Larry had improved both in strategy and in self-control. He learned that a calm mind sees trends clearly. A noisy mind sees only opportunity and misses danger. With patience as his weapon, he was ready to explore deeper layers of market psychology. The journey was still long, and the greatest lessons were yet to come. Chapter 5: Market Psychology and Crowd Behavior. As Larry continued to grow as a trader, he discovered that the market is not moved by logic alone. It is driven by the emotions of thousands of people buying and selling. He realized that if he wanted to win, he must understand the mind of the crowd. He watched how fear spreads quickly and creates panic selling. He noticed how greed makes people chase prices to foolish heights. Excitement pushes traders to act fast without thinking. Doubt makes them exit too early from a good trade. The market is a mirror that reflects all these emotions in real time through price movement. Larry learned that when everyone agrees a trend has to continue, that is often when the trend ends. When the crowd becomes too confident, danger grows silently. He told himself that if the whole world believes a stock can only go up, then he should be careful. Nothing in the market goes only in one direction. He also observed that when people panic and dump shares without thinking, opportunities appear. Fear creates bargains. He trained himself to stay calm when others lost control. He said to himself that a true trader must think independently, not follow the crowd blindly. Tape reading became more meaningful for him now. It was no longer just numbers moving. It was a language of human behavior. Every rise told a story of hope. Every fall told a story of fear. He studied these stories every day. Larry noticed that rumors make traders act quickly, but rumors are often wrong. The price always tells the truth sooner or later. If good news appears, but price does not rise, there is something wrong. If bad news spreads, but price remains strong, then big players are silently buying. This taught him that the reaction to news is more important than news itself. Another key insight he gained was that the biggest profits come when a trader joins the crowd early and leaves before the crowd notices the danger. Timing again was everything. Larry learned that a trader must be both part of the market and above it. He must feel the pressure everyone feels, yet act with cool judgment. He must see what others see, but think what others do not think. Crowd psychology also helped him avoid traps. He saw how traders chase sudden spikes hoping for quick riches. He avoided these traps and waited for strong, steady trends. He believed that a trend built slowly by smart money is safer than a trend created by excitement. Larry said to himself that the market never forces traders to act. Traders make themselves act by listening to their emotions. Patience and clear thinking are the weapons to fight crowd influence. Through experience, he understood a powerful truth. The market does not beat you. You beat yourself by following the crowd without thinking. Winning traders control their mind first and their trades second. By mastering psychology, Larry took another big step in his journey. He was no longer carried by market emotions. Instead, he stood outside and read the emotions of others. This ability gave him strength to face bigger challenges and larger trades. He knew that the path ahead would bring both great victories and painful mistakes, but he now had a solid foundation to continue forward. Chapter 6: Big Gains, Painful Losses, and Risk Management. Larry had now grown into a skilled trader, and soon the market rewarded him with one of the biggest winning streaks of his life. He finally tasted what it feels like to be on the right side of a major trend. His profits were no longer small. He made sums that once felt impossible. The success made him famous among traders and brokers. With this success came confidence, and with confidence came risk. Larry took bold positions believing his understanding of trends could never fail. When the market moved as he expected, his gains became huge. He felt unstoppable. But the market always tests those who think they have figured out everything. During one strong bull run, Larry made a fortune. He bought early, held through ups and downs, and let the trend carry him high. He finally understood the power of sitting tight. The real money came not from quick trades, but from staying with a winning position. That win changed his life and proved that patience and profit is the key to big success. But soon after victory came a painful fall. The market shifted silently, and Larry did not exit. He ignored warning signs, believing it was only a minor pullback. Instead of cutting his losses, he hoped for recovery. Hope trapped him. The trend reversed, and he lost a large part of what he had earned. It felt like the market had taken back its gift. This loss shook him deeply. It taught him that confidence must be balanced with caution. A trader cannot fall in love with profit. Protection of capital matters more than chasing extra returns. He promised himself that whenever a trade goes wrong, he would get out quickly. Larry developed his personal rules of risk. Never let a small loss become a big one. Never add to a losing trade, no matter how tempting. Never hold a stock hoping it will turn around without proof from price. He realized that survival is more important than heroism. He also learned that a trader must size positions wisely. Large positions bring large profits, but also large danger. He reduced position size during uncertain times and increased only when the trend was clear. This helped him stay calm and think clearly. Another lesson came from observing other traders. Many talented traders made money fast, but lost it faster because they lacked discipline. Some refused to take losses. Some doubled down when wrong. Some listened to tips and rumors instead of price. Larry saw them vanish one by one. He did not want to be like them. He understood that a long career in trading is built not on winning every trade, but on protecting the account against destruction. One bad trade should never ruin a trader. Capital is like oxygen. Without it, survival ends. Through victories and defeats, Larry grew wiser. He respected the market more than ever. He accepted losses as part of trading, like rent paid to stay in the game. He learned that the goal is not to avoid losses, but to make sure they are small. In time, Larry regained both money and confidence, but it was a different kind of confidence now. It came from discipline, not pride. From experience, not excitement. From control, not emotion. This chapter in his life proved that the journey of a trader is a journey of inner growth. He was now prepared to deal with news events, rumors, and sudden market shocks that would test him again in the future. Chapter 7. The impact of news and external information on trades. As Larry continued to trade, he noticed something interesting about news and information. People often believe that news controls the market, but he discovered that the market frequently moves before news becomes public. Price action seemed to know the truth earlier than newspapers and rumors. Sometimes good news came out, but the stock did not rise. Sometimes bad news appeared, but the stock held firm, or even climbed. Larry realized that it was not the news itself that mattered, but how the market reacted to it. If good news failed to push price higher, it meant the stock had already been priced for that outcome. If bad news could not push price down, it meant big players were accumulating silently. He learned to trust the tape more than headlines. People who traded based on newspapers were always late. By the time information reached the public, professionals had already acted. News became a trap for emotional traders. Larry also watched how rumors spread like wildfire. A whisper in the room could make small traders rush to buy or sell without thinking. Crowds act quickly when fear or excitement take over. He trained himself to stay calm when others reacted emotionally. If the market movement did not support the rumor, he stayed away. One of his greatest realizations was that the market speaks louder than any news article. If price moves strongly upward with high interest, it means demand is real, regardless of stories. If price falls quickly, despite positive talk, something is wrong under the surface. Tape reading gave him confidence to ignore noise. During one period, a hot stock was praised in newspapers as a sure winner. Every trader around Larry jumped to buy. But when he watched the tape, it showed weakness. Big sell orders appeared quietly. He trusted the tape and avoided buying. Days later, the stock crashed, and traders who believed the hype lost heavily. This incident reinforced his faith in price action. But Larry himself was not perfect. At times, even he was trapped by news. One day he trusted a story expecting a big move. He bought early without waiting for confirmation. The market refused to rise. He held hoping the news would push price soon. Instead, it fell slowly, and he had to exit with loss. He reminded himself that hope is not a strategy. Larry created his own rule regarding news. Watch how price behaves after news, not before it. If price strengthens on good news, it may continue. If price weakens after good news, it is a warning. This simple principle became a powerful weapon. He also realized that financial media often reacts after the event. When stocks already rise, newspapers later praise them. When stocks crash, news comes explaining reasons. Markets lead and news follows, not the other way. This chapter taught him that information is useful only when filtered through price action. Blindly following news leads to emotional decisions. A trader must combine logic, patience, and tape reading instead of chasing headlines. Larry continued to grow stronger in understanding how external events affect trading. He could now see through panic, excitement, and media noise. This wisdom prepared him for the emotional traps and overconfidence that awaited him next. Chapter 8. Overconfidence, complacency, and emotional pitfalls. Success in trading brings money, but it also brings something dangerous. It brings pride. Larry knew this, yet he still fell into the trap more than once. After big profits, he started believing that he could not be wrong. He felt he had mastered the market, but the market has its own way of teaching humility. When confidence grows too large, it slowly turns into overconfidence. Larry increased his position sizes and took risks that were not necessary. He entered trades quickly, trusting his instincts instead of waiting for signals. At first, the market still rewarded him, which made the illusion stronger. But one wrong move was enough to shake everything. A trade that looked perfect turned against him. Instead of exiting fast, he held it. He believed his judgment was correct and market would return. Days passed, yet price moved further away. He felt stress, but pride stopped him from accepting defeat. The loss grew quietly like a fire spreading under the floor. In the past, Larry would cut losses early. Now he waited hoping for reversal. The same old lesson returned. Hope is the enemy of the trader. He had to close with a painful loss, much bigger than he ever planned. This moment opened his eyes again. He realized that confidence must be controlled. A trader must be humble even after victory. Market rewards patience, but punishes ego. Larry promised himself to respect trends and signals more carefully. Another emotional danger he noticed was complacency. Success made him relaxed. He skipped analysis some days and took trades casually. He assumed the trend would continue without checking proof. But markets change like weather. A calm sky can turn stormy in one moment. When Larry fell into comfort, he stopped learning. He understood that a trader must stay alert every day. The market does not forgive laziness. Discipline must continue even when profit flows easily. He also studied the emotional cycles of traders. Fear comes after loss. Greed comes after gain. Hope comes during drawdowns. Despair comes when capital shrinks. The trader who identifies these feelings can protect himself. Larry learned to question his own emotions. Was he entering because of opportunity or excitement? Was he holding because of analysis or hope? Was he increasing size because of confidence or ego? Honest answers guided him toward better decisions. At this stage, he discovered another truth. The hardest battles in trading occur inside the mind. Charts and price tell direction, but emotions tell you to act too early or too late. A trader must master his mind, or the mind will master him. After repeating mistakes and paying for them, Larry gained emotional maturity. He learned to stay neutral after a win or loss. No excitement, no fear, just observation. This balance made him stronger than before. With more control over pride and fear, Larry moved closer to real mastery. The market shaped him through gains and losses like a hammer shapes iron. He was preparing internally for storms where his strategies would be tested once again. Ahead lay periods of difficult markets and changing conditions. But with emotional awareness, he was better prepared. He was ready to face the next stage where he must adapt to survive. Chapter 9. Coping with Adverse Markets and Shifting Strategies. There came a time when the market changed its nature, and Larry felt the pressure more than ever. Trends were unclear, signals were weak, and trades that once worked smoothly now failed. Larry realized that trading success is not permanent. The market moves through seasons just like nature. There is a season to grow and a season to protect. Earlier, he found great success by following strong trends. But now, the market was choppy and unpredictable. His old methods did not give the same results. He had to adapt if he wanted to survive. Larry studied the market again with fresh eyes. He watched the tape carefully and noticed that big players were less active. Moves lacked volume and confidence. He understood that the market was waiting. In such times, a trader must wait too. It was painful to reduce trading after big victories. The urge to make money was strong, but experience reminded him that forcing trades leads to losses. He told himself to treat capital like a precious resource not to be wasted. He lowered his position sizes and traded only when the setup was clean. Even with caution, he faced losing periods. He felt frustration creeping into his mind. Doubt questioned his skills. But Larry knew every trader faces difficult phases. What matters is not avoiding storms, but surviving them. He stopped thinking about how much he lost and focused on how to move forward. He reminded himself that the market is not a friend nor an enemy. It simply exists. A trader must learn its rhythm again and again. Larry used this slow period to sharpen his discipline. He read old notes, reviewed past trades, and found patterns in his behavior. He realized that his best decisions came when he followed rules. His worst came when he listened to emotions. so he rebuilt his routine with stronger clarity. He also began to use different strategies. Instead of relying only on breakouts, he studied pullbacks and support levels. Instead of chasing moves, he waited for confirmation. He looked for moments when fear was high and value was hidden. Flexibility became his strength. He watched other traders panic and quit during rough times. Many thought the market was broken, but Larry believed that markets simply change shape. If one adapts, opportunity returns. His patience and persistence kept him alive. Slowly the clouds cleared. New trends formed, volume increased, and the tape spoke again. Larry was ready. With a calm mind and refined strategy, he entered trades selectively. Success returned not by luck, but by preparation. Through this phase, he learned that a trader must evolve. What worked before will not always work later. The market teaches that there is no final secret, only continuous learning. Larry came out of this difficult period stronger than before. He respected the market more deeply and trusted patience more than excitement. He now knew that survival is the real achievement in trading. Profit is the reward of survival. With renewed confidence and wisdom, he moved toward a stage where he would summarize his life's lessons into powerful principles of speculation. These principles formed the backbone of his future success and legacy. Chapter 10. Core Principles of Successful Speculation. After years of wins and losses, Larry realized that trading is not only a job. It is a craft that demands discipline, wisdom, and emotional strength. From his long journey, he gathered rules that shaped him into a true speculator. These rules became the foundation of his success. The first principle he learned was to cut losses quickly. A small loss is a lesson, a big loss is a disaster. When price proves you wrong, leave without hesitation. Never argue with the market. Never hold a losing trade hoping it will return. The second principle was to let profits grow. Most traders take small gains and let losses run. Larry did the opposite. He held winning trades as long as the trend was strong. He said that big money does not come from frequent trades, but from big moves that you ride patiently. The third truth he discovered was to never average a losing position. Adding to a losing trade is like digging a deeper hole. If the market is against you, accept it and exit. There will always be new opportunities. Another rule was to wait for the right moment. The market does not offer chances every day. A trader must sit tight during confusion and strike only when direction is clear. Patience is more valuable than excitement. Larry also believed that the trend is your friend. If the market moves upward, buy and stay long. If the market falls, avoid buying and look for opportunities to go short. Do not fight the main flow. A trader must move with the river, not against it. He learned that opinions are dangerous if they are not supported by price. Many traders lose money because they love their prediction more than reality. Facts are written on the tape. Price listens to no one. Larry also realized that emotional control is the real advantage. Fear can stop you from entering a good trade. Greed can make you enter too early. Hope can keep you stuck in losing positions. A calm mind sees clearly. A noisy mind sees only dreams. He repeated to himself another golden rule. Do not listen to tips and rumors. Most tips come from people who do not follow them themselves. Trade only what you understand. He saw that successful traders think differently. They do not follow the crowd. They wait for the crowd to show emotion and then act with reason. They buy when others are fearful and sell when others brag with confidence. Larry knew that trading is a lifelong learning process. Even after years, he still made mistakes. But each mistake became a stepping stone, not a setback. He believed that a trader who stops learning is already losing. His principles were simple, but not easy. Anyone can read them, but few can practice them with discipline. They demand patience, courage, self-control, and constant awareness. But following them gives a trader the best chance of success. With these principles engraved in his mind, Larry stepped into the final stage of his journey, where he looked back at everything the market had taught him. He was no longer just chasing profit. He was building wisdom that could guide future generations of traders. Chapter 11. Reflections on Decades of Trading. Enduring Lessons. In the final stage of his journey, Larry Livingston looked back at the long road that shaped him as a trader. He began as a curious boy, watching price boards, then became a bucket shop winner, then a Wall Street loser, then a master speculator forged by time. His life was a cycle of rise, fall, and rise again. Every success brought new lessons, and every failure taught him more than any book could. With age, he understood that trading is not about winning every trade. It is about staying in the game long enough to benefit from the big moves that come rarely. A trader's true enemy is not the market, but impatience, ego, and uncontrolled emotion. The market simply reflects human nature. It rewards those who understand psychology and punishes those who ignore it. Larry realized that price movement repeats itself because people repeat behavior. When the crowd is greedy, markets rise, and when fear grips them, prices fall. A trader must see beyond noise and search for truth in price action. Tape reading became his lifelong friend. It never lied. News could mislead, but price always revealed reality. He reflected on the meaning of discipline. Rules look simple, yet following them daily is the real challenge. Cut losses quickly, let profits run, avoid averaging a losing trade, wait for clear trend, and never trade on excitement. These were not just rules, but survival tools. Breaking any one of them led to losses. He remembered days when he felt invincible after a win, and days he felt broken after a loss. He learned not to celebrate too much, and not to grieve too long. The market continues no matter how you feel. Control of mind is more powerful than any strategy. Larry also admitted that the market teaches through pain. Every beginner wants quick riches, but true wealth comes slowly through experience. Losses are like tuition fees paid to the greatest university in the world, the market. One who learns pays once, one who refuses to learn pays forever. He thought about traders who came and disappeared. Some were smart but lacked patience. Some were brave but lacked discipline. Some were skilled but failed to control emotion. Only a few survived the test of time. Survival itself was victory. Larry believed that no trader ever truly graduates. Even after decades, he faced new situations that demanded new thinking. The market evolves, and so must the trader. A rigid mind breaks, but a flexible mind grows. In his reflections, he found peace. He was proud of his journey, not because he made fortunes, but because he learned life through trading. He learned humility after gains, patience after losses, and calmness in uncertainty. Trading shaped his character more than any school could. He wished future traders to understand these truths. Do not chase every move. Do not fight trends. Protect capital like treasure. Trust price more than words. Be patient like a hunter waiting for prey. Master yourself before trying to master the market. Larry's story is not just a record of trades, but a story of human struggle and growth. It teaches that success comes to those who observe more than they speak and think more than they react. The market is a fascinating teacher that rewards discipline and punishes ego. As he closed his journey, he left behind wisdom that would inspire countless traders after him. His life became a symbol of patience, courage, and learning. Reminiscences of a Stock Operator stands as a timeless guide proving that markets change, but human nature stays the same. Who understands this truth becomes not just a trader, but a wise operator of life itself.